Good morning. This is Bloomberg Daybreak Europe. I'm Kriti Gupta in London. These are the stories that set your agenda. The Biden administration weighing additional curbs on semiconductor equipment and AI memory chips sold to China. It's the latest crackdown on Beijing's tech ambitions. Meanwhile, right here in Europe, the French government facing a potential no-confidence vote that could oust Prime Minister Michel Barnier as he attempts to pass the budget, shaking French bonds and stocks as well. Meanwhile, back in the States, the U.S. FTC launching a broad investigation into tech giant Microsoft, looking into everything from cloud computing to AI, even cybersecurity, ahead of a new administration. Good morning. Let's get a quick check on these markets here. Green on the screen, but what I have to warn you that it is Thanksgiving in the States. A lot of folks are off, except for me and, of course, some of our producers and technical team. Luckily for us, we get a little bit of positive vibes. We are thankful for that. But what that means, it means light volume, light liquidity, and a little bit of autopilot. And that's exactly what you're seeing in futures this morning. Your Stock 50 futures soaring, higher by 0.6%. FTSE 100 kind of on the back foot, higher by about 0.2%. Even the S&P futures and Nasdaq higher by 0.2%. But I wouldn't read too much into that because, again, light volume, light liquidity on this U.S. holiday. The cross-asset story might be a little bit different. I think that's where the FX markets really, really matter. You are going to see a little bit more volume there. When you look at euro dollar, it is weaker, down by about 0.2%. That tariff overhang or potential tariff overhang, not to mention what's going on in France, is kind of overshadowing potential gains in the euro. You are also seeing, by the way, weakness in the Chinese yuan, and that's where the Trump story really shows up. To me, I think what was shocking is that you are seeing a little bit of a revival in the Mexican peso. Dollar Mex actually weaker this morning, a little bit of a kind of maybe retracement of the weakness you've seen in the Mexican peso this morning. Mexican peso coming stronger there as well. And Brent crude maybe reflecting some of that resentiment, may simply be a little bit of low volume there as well, trading around a 72 handle, just shy of 73. That's your cross-asset story. Let's see how those Asian markets are faring. Avril Hong standing by in Singapore. Avril.
Hey, Kriti. Yeah, Asia stock gauge is flat because it's a mixed bag. China is down, Japan is running slightly higher, helped along in part by a bit of a reversal in the gains of the Japanese currency of late. And note, it's also partially to do with thin liquidity given the Thanksgiving holiday. But China is really where we're seeing the hit to sentiment. It is spreading a little bit to different parts of Asia as well. And it's against the backdrop of this Bloomberg scoop, right, that the Biden administration is considering fresh curbs to China in terms of the sales of chip-making related equipment, AI chips as well. And while they've pointed out in this report that it might be fewer Huawei suppliers that are in the crosshair potentially, is just a reminder about the geopolitical risk, the tensions between the US and China. That's what we're seeing in Chinese equities today. Flip the board, because part of why you're seeing the Japanese stock gauge in the green is this boost from the chip makers in the country. And analysts have pointed out it's really the ones with heavy sales weightings to China that are benefiting today. Tokyo Electron at one point in the session jumping as much as 10%, pairing some of that now. But flip the board again, I wanted to highlight on a day where China's stocks are really underperforming, a broader trend that we've been seeing in terms of the major ETFs and how they've been seeing outflows. Indeed, they are set for a record monthly outflow this month. It's quite a reversal from the prior month. And this was, of course, driven by stimulus. That was really what drove the equity rebound. The sentiment has shifted quite significantly. You think about how investors now don't seem as optimistic that Chinese authorities will come through with enough stimulus to lift consumption. And there's also the specter of higher US tariffs. So this is what we're seeing in Chinese stocks today and this month in general. Kriti?
The fact that the exodus is very much showing up already in the markets, even before Donald Trump has been inaugurated, is crucial. Avril Hong in Singapore, we thank you so much for watching. Let's stick with that theme of protectionism there. The Biden administration, of course, as they look to change administrations, is said to be weighing additional curbs on that chip sales to China. Avril just mentioned that. It's a crackdown that stops short of some of the stricter measures previously considered, but still clearly having some market effects. Let's get a little bit more information here. Bloomberg's Katia Dimitrieva joining us this morning to walk us through some of these details. Katia, we've heard this before. We've heard this tough on China rhetoric before from both administrations, the Biden administration, the Trump administration, of course, the Trump administration again in their 2.0. What's different about these measures?
Well, Kriti, they're significantly scaled down from what we were hearing before. U.S. officials, as you mentioned, have long been considering additional chip curbs. You know, this is a real pain point. And what we heard, or our understanding of what's to come, is now significantly scaled down. So previously, there were 6 Huawei suppliers that were kind of on the list or target list potentially for U.S. officials. That's been significantly scaled down. There's only going to be a couple of those companies. And there's also sanctions that are under discussion for 2 additional companies related to Huawei. And of course, Huawei being the China's tech giant. And I think part of the reason, or part of the reason that China can perhaps thank for these scaled down measures is actually the U.S. So U.S. industries came out pretty heavily against these moves, and in discussions with U.S. officials have been saying, you know, these chips are really important for us and for our business. And of course, the experience from Trump 1.0 is those prices just start to go up for U.S. manufacturers. And of course, this is kind of a preview of what's to come, because Trump is, of course, being inaugurated next year, and we know that there's going to be a lot more to come in terms of tariffs and new rules on imports.
Talk to us as well about the Mexico story, because it really is all connected. The China policy with the Mexico policy, really to tackle the fentanyl, maybe a kind of supply chain that eventually makes itself into the opioid crisis in the United States. For our international audience that isn't familiar, some conversations happening between the Mexican president and President-elect Donald Trump. What do we know?
Well, they had a press conference today about it. They gathered business people, and Mexico really came out and said, it was with the president and the finance minister, saying that we are preparing, in fact, countermeasures or potential countermeasures if this comes into force. And they also laid out a presentation that showed and almost acted as like a warning to U.S. consumers and said, well, if these tariffs come in, the 25% that Trump had vowed on Monday against Canada and Mexico, that would actually cost 400,000 U.S. jobs. And it would also raise the cost of cars by about $3,000 a unit. That's Ford and GM, which have manufacturing plants in Mexico. So it's a very big hit to the U.S. economy and to U.S. Jobs. And this was not an answer, I should note, to one reporter question. It was a full-fledged report. And we heard something similar from Canada's finance minister as well, just about how they're planning to push back in case of tariffs.
Yeah. Well, Gauthier, certainly something that's crucial. Donald Trump immediately coming out and saying, well, actually, they're looking to close the border. Mexican President Sheinbaum saying, actually, that's not exactly what the conversation was. Interesting to hear that tit for tat. Bloomberg's Gauthier Dimitrieva giving us that roundup of Mexico and China and those interactions with Donald Trump. Meanwhile, here in Europe, a different conversation around government. French banking stocks have been under pressure, a deepening political crisis in the country as they face a potential no confidence vote that could oust Prime Minister Michel Barnier. A lot of that, of course, coming from whether or not he can pass a budget.
If the budget stays the same, yes. This is not a surprise. We always said it for the past 3 months. I'm telling you, if this budget is not approved, the budget of last year will apply, and actually it's not as bad as this one, as there are less taxes for the working and middle classes.
Let's get more from Bloomberg's Caroline Conan joining us this morning from Paris. Caroline, today is crucial. A pension reform repeal vote. How is it going to work? Walk us through it.
Yes, so this vote actually is kind of a test of what could happen if there's a no confidence vote over the next few days or over the next few weeks against the Prime Minister Michel Barnier. Because the national rally of Marine Le Pen and the left wing, which actually proposed this repeal vote of the pension reform, probably will join forces in order to support this proposal to repeal the pension reform. Now, it's actually unlikely to happen. It's going to be stuck somewhere in a legislative process because, like in the Senate, they've got the Republican majority. But it's very obviously heavily charged because Marine Le Pen, as you just heard, has been threatening over the past few days to really support this vote of no confidence. And she is the kingmaker in Parliament, given Michel Barnier does not have a majority. So she has some red lines on the budget. budget. She doesn't want to see prices of medicine rise, for example. She said she wants more measures to cut spending on immigration, and she is totally against raising taxes again on electricity. So clearly there's going to be a negotiations process over the next few days and few weeks. Potentially, Michel Barnier could face a first vote of no confidence as soon as next week on the social security part of the budget. And then if he manages to survive next week, then we're all looking at the week just before Christmas, which is going to be the deadline for the budget. And this is where the left wing and the National Rally could potentially join forces against Michel Barnier and make this government collapse. So it's all a game of chicken between Le Pen and Macron supporters and Michel Barnier's government. One of the ministers who is actually in charge of the relations between the government and the parliament, Mark Fesneau, said over the past couple of days, we are like turkeys waiting for Christmas.
An apt analogy on Thanksgiving. Bloomberg's Caroline Coden, we thank you so much for walking us through the French story. And of course, that is something that's having rippling effects across the markets. We've seen that, of course, in the bond market. Those wides against the German debt story still remaining there. That compression not really showing up. It's showing up in the stock market as well. Our very own Valerie Teitel all over that story. Val.
Look, the CAC 40 has underperformed by a very wide margin broader European assets when we look at the comparison versus the DAX versus the Stock 600. If we look back all the way since the creation of the Euro Crity, this is the second worst underperformance when it comes to the French stock market. A lot of the recent drag has been due to the weakness in French banks. If you flip on, we can just talk briefly about how those banks have performed in the last 2 weeks. All three major French banks, it comes to BNP, Soc Gen, and Credit Agricole. If we flip on, maybe we can take a look at how they performed over the last 2 weeks, all solidly in the red. A lot of this has to do with, as you mentioned, the widening of those French OAT spreads, the yields rising when it comes to those bonds. It's very interesting to note, though, Critty, a lot of these banks hold those bonds on asset swap, and those asset swaps have not been performing very well. If we flip on, we can take a look at how they've been performing, because we've actually had a de-link versus the asset swap versus how it's been trading in Germany, which is very worrying to these banks' balance sheets because they hold these French bonds on asset swap. Another thing I found very interesting, if we flip on, we can talk about how the French yields compare to the broader yields across Europe. Now, Critty, this is something I never thought I would see. Being on a trading desk during the sovereign debt crisis, we're now having the French 10-year yield basically on par with the Greece 10-year yield. They are very, very close to inverting. This is something that has not happened since the creation of the euro, and maybe we see a bit of this inversion happen today. Very interesting and a decent sign of the times, of the peril of the French economy.
And that's just the European story. Talk to us about the U.S. story as well, because overnight we did get some data out of the States.
We did get a lot of data out of the States yesterday. A lot of this brought forward because of the Thanksgiving holiday today. Most of it came on the screws. Thankfully, there wasn't any surprise. A lot of the attention was on the core PCE metric, which basically came down to expectations to the third decimal Critty. So not a lot of volatility when it came to the U.S. markets after these data releases. Expectations for the Federal Reserve's December meeting stayed very stable. We're now looking at a 17 basis points of a cut priced in for that December 18th Fed meeting.
We'll certainly see how that all shakes out in that market pricing. Bloomberg's Valerie Teitel, we thank you so much. Let's talk about some of the other data points that we're going to get on this side of the Atlantic in the next couple of hours. Of course, it is Thanksgiving, as Val mentioned. We are seeing light liquidity. That's not going to stop us from covering the inflation story right here in Europe. At Spanish October CPI numbers, those preliminary data points coming at about 8 a.m. UK. So basically in the next less than 2 hours or so. Then at 1 p.m. UK time, we get Germany's October CPI. We're going to get a lot of those numbers crossing the wire as well. And then we also get plenty of ECB speak. Villeroy, Knott, and Lane all going to be speaking throughout the day. Coming up on the program, we're going to go back to the States, though. The FTC has opened a broad antitrust investigation into tech giant Microsoft. We're going to dive into the details next. Stick with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. I'm Kriti Gupta in London. Microsoft is being investigated by the U.S. FTC, the Federal Trade Commission, looking into everything from the company's cloud computing and software licensing businesses to cybersecurity offerings and AI products as well. So you can see on your screen, after hours moving down about 0.2%. But in the session, when the headlines broke, down a whopping 1.2%. Let's get more on that investigation. Bloomberg's John Harney joins us out of Washington, D.C. John, walk us through this inquiry here. Why now? What are they looking into?
Well, there are a number of factors involved, as my colleagues Josh Cisco, Leah Nyland, and Dina Bass report. One is Microsoft is a major government contractor, including with the Defense Department. And the other is, which probably or may well have weighed on the minds of the FTC, was the CrowdStrike failure of earlier this year in July. That, of course, affected entities, companies, individuals, organizations all over the world, everything from airports to doctors' offices. And CrowdStrike, of course, was carried on the Windows operating system. So it demonstrated to everyone, not least governments, that Windows might, because of its pervasiveness, might be vulnerable. So this marks the finale, probably, for Lina Khan, the FTC chair, who has had a very, has pursued a very vigorous antitrust campaign, the most aggressive in Washington's recent memory.
I mean, it's fascinating that you're talking about this, because it feels like so much of this kind of last-minute ire, basically, from the FTC and from the Biden administration is being rushed through ahead of President-elect. Walk us through that dynamic when antitrust has largely been a bipartisan issue in Washington.
Well, right. I mean, I don't know if rush is quite the right word, because, according to our report, the request for information runs to hundreds of pages, and you can't just, do that quickly. And of course, you can imagine just how broad this inquiry is, because and what the responses, if they ever come out, will how many pages that'll be. But it remains unclear what will happen in the Trump administration, because they can't just shut off this investigation once it starts. And Lina Khan has, unlike much of the rest of the Biden administration, some boosters in the Republican ranks, not least J.D. Vance, who has praised her work. And the tech industry is still regarded with suspicion among conservatives who have accused these companies, these giants, of censoring them. And of course, the companies have denied that.
That's certainly something we're going to be keeping a close eye on. These things, of course, can take years, but can sometimes shake the markets in the meantime. Bloomberg's John Harney, we thank you so much joining us, and a late night for him out of Washington, D.C. this morning. Let's get to some of the other stories making news around the world. Uber is also under investigation by the U.S. Federal Trade Commission over whether it violated consumer protection laws with its subscription service. The FTC is looking at the enrollment and cancellation aspects of the Uber One service, which provides discounts on rides and delivery orders. Uber says it's quick and easy to cancel the service. Now, BlackRock is reported to have agreed on a broad outline of a deal to acquire private credit group HPS Investment Partners. According to the Financial Times, the deal values the target at about $12 billion. Now, if it goes ahead, it would see BlackRock gain more than $500 billion in alternative assets. Now, sticking with the asset management story, Texas and 10 Republican states in the U.S. have sued BlackRock, Vanguard, and State Street over their climate push. They accuse the asset managers of violating antitrust law through climate activism that reduced coal production and boosted energy prices. BlackRock hit back, calling that lawsuit, quote, baseless, and that it, quote, defies common sense. Now, coming up on the program, we'll go back to D.C. We're going to take a look at how Donald Trump's threats of tariffs could impact the so-called special relationship between the U.K. and the United States. More on that dynamic next. This is Bloomberg. Americans are big buyers of British exports like Land Rovers, Rolls-Royce engines, and a string of blockbuster pharmaceuticals. So how could U.S. President-elect Donald Trump's tariff threats impact the UK economy? Well, our very own Arena Engel, Bloomberg's UK reporter, has dove into that very issue. I'm going to try to get my words right this morning. I'm sure you're far more awake than I am. Walk us through how exposed the UK economy really is.
So I think the UK economy is definitely more exposed to potential Trump tariffs than we think it is. The UK likes to think of itself as this, consultation nation, services superpower, which it is because 2/3 of its trade with the US actually is in services. However, as you mentioned, Americans love lots of British goods. They're the top buyers for Land Rovers, for lots of pharma products, and if you look at the 15 manufacturing sectors, the top 15 manufacturing sectors in the UK, 9 of them have the US as the main buyer. And to put things into context, in Germany, only 4 sectors have the US as their top client, whereas in France, there's only 1. So that leaves us more exposed.
So some of the kind of arguments against that is simply that there are carve-outs for a lot of the defense exports, for example, for the UK. Does that apply here?
Well, we've spoken to a couple of lawyers who mentioned that it would be very unlikely that the U.S. would carve out specific exemptions for sectors like pharma. So that still leaves those sectors exposed.
I mean, and walk us through kind of the retaliation here. Something we talk about with Europe, with Mexico, as well as some of these come up. Can the UK actually do anything to say, well, we don't like what you're saying, let's retaliate? Or are they do they have their hands tied?
Well, there have been some media reports this week digging out the fact that the UK could actually repurpose some of EU's tariffs against the US from the previous Trump administration. And, those would include tariffs on goods like Harley-Davidson motorbikes or Levi's jeans or Jack Daniel's bourbon. However, it is very clear that the UK would very much rather avoid having a trade war. We've had the Bank of England Governor Andrew Bailey, also Chancellor Rachel Reeves sort of pushing for free trade and really championing that. But it would be very, very difficult to reach a free trade agreement with the U.S. I think it's important to remember that because we know that discussions with the previous Trump administration were ground to a halt because of major disagreements on issues like climate change, like tariffs, like government procurement. So those are still very much happening, those disagreements.
All right. Bloomberg's Arena Engel walking us through that special relationship and what could potentially come into peril. She's done some deep dive. You can read her full story on Bloomberg.com and, of course, on the terminal as well. Coming up on the program, we're going to stick with the European story, France's budget standoff. We're going to look at what happens if Marine Le Pen does indeed follow through on her threat to bring down the government. We're already seeing it shake down some of the stock market, the bond market. Very own Valerie Titel talking about this as well. But remember, at the same time, you also have what's going on in Germany, the debt break conversation, the federal election there as well. All of this is going to shake out to some very real volatility. We haven't even talked about the Trump threat on EU exports just yet. All of that coming up. Of course, it is Thanksgiving holidays here in the United States, I should say. European futures are actually up. All of that coming up and more next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Kriti Gupta in London. Let's get to the stories that set your agenda. The Biden administration weighing additional curbs on semiconductor equipment and AI memory chips sold to China. It's the latest crackdown on Beijing's tech ambitions. Meanwhile, right here in Europe, the French government facing a potential no-confidence vote that could oust Prime Minister Michel Barnier as he attempts to pass the budget. French bonds and stocks feeling the effect. Meanwhile, over in the U.S., the FTC launching a broad investigation into tech giant Microsoft, looking into everything from cloud computing to AI, even cybersecurity, ahead of a new administration. In the meantime, let's get a quick check on these markets here because it is Thanksgiving holiday over in the States, and that does mean U.S. traders are off their desk, especially when it comes to the bond markets. Those bond markets are closed around the world, but the future story remains open. With a caveat, light volume, light liquidity is what you need to know. And I think that's why you're seeing the green on the screen this morning. Eurostoxx 50 futures higher by a whopping 0.6%. The FTSE 100 right on its heels, higher by about 0.2%. The same margin, by the way, over in the States. But again, it kind of feels like the markets are on a little bit of autopilot here, despite some of the economic data that maybe we got in the last 24 hours in both sides of the Atlantic. More volatility, I would argue, in the currency picture. I want to go to our cross-asset story next. When you look at the currency story, you are going to see a lot of the tariff overhang as well. Eurodollar, for example, coming into a 105 handle. Weakness in the Chinese yuan, but strength in the Mexican peso. And that's not necessarily because of the conversation that happened between the President Sheinbaum and President-elect Donald Trump. It kind of feels like a retracement of some of the weakness you've seen in the Mexican peso. We're going to dive into that in the hours ahead as well. Brent crude, in the meantime, very light volume, very light liquidity, trading just shy of a 73 handle. I want to get to some earnings news as we speak at the moment, because one of the big tariff conversations is going to be specifically in the drink maker space. We're getting Remy Cointreau numbers here. The full year organic revenue coming from 15 to 18% of a drop. The estimate was a drop of about 12%. So a worse drop when it comes to that organic revenue than expected. The operating margin coming in for the full year from more between 21 to 22%. So seeing a little bit of potential pain when it comes to those Remy Cointreau numbers. We'll have to see what happens when we do actually get a little bit more of a signal from what the impact on potential tariffs down the pike may actually look like. We'll bring you, of course, those headlines as we get it. Let's stick with the French story here. Investors in France watching a key budget vote in Parliament today. Yesterday, the French spread between their 10-year bonds and their Greek counterparts moved close to turning negative for the first time since 1998. We've already seen that happen with the likes of Spain, for example. Italy also on the agenda potentially down the road. French Prime Minister, Michel Barnier, warning of a, quote, storm in financial markets if his government spending cuts are indeed suspended. I'm pleased to be joined now this morning by Pierre-Yves Gauthier, founder of Alphavalue. Pierre-Yves, a pleasure to have you on the program. Thank you so much for joining me this morning. Let's start with the market reaction here. Talk to us a little bit about just how much kind of turmoil we could see, given that those spreads haven't really closed since we had the first kind of budget freak out earlier this year.
Well, I think it's a lose-lose situation today. We know that the bargaining process, which led to the ongoing definition of what could be a budget for 2025, has been so ill-managed that practically there is not enough in terms of spending cuts or not enough in terms of new taxes to bring the 2025 budget to its initial target, which is a 5% deficit. So markets are recognizing that. And on top of that, in any case, the Parliament seems set to have a vote of no confidence. Therefore, we are back to square one. But back to square one means redesigning a budget. But for that, you have to have a new government if the no confidence vote is a success. And that brings, obviously, the French political class and the budgeting process into an agenda which is out of control. And the agenda out of control means that practically spending will continue to grow. Taxes may go up a bit thanks to inflation, but net-net, it looks as if we end up with a wider deficit than even in 2024. And as a reminder, 2024 itself was 6% and unexpected up to last summer. So by and large, the news are only negative. And the surprising thing is really that markets took some time to react to this ugly sort of outlook.
Well, it's pretty straightforward, right? The fact that you see that austerity is kind of back in vogue here from a lot of these governments around Europe. It feels like today we may get our first taste of that with the vote on pension reform. How likely is that to move the markets? Is this something that people are actively responsive to when it comes to trading the French story?
Well, if the question is narrowed down to this pension issue, is it going to happen? Is there going to be a more lax system and therefore higher deficit due to pension? I don't think it really matters today. We were speaking of adjustment at the margin. The real issue is really the lack of a stable government looking forward. So it's more the political calendar which is really now on the table, and that from a debt market standpoint has been very clearly indicated yesterday by the widening of the gap, widening of the spread with the bond. And it's actually, for me, a surprise that it stopped at 85 basis points. It has all the potential, obviously, to widen up.
And we were just talking about how it's already potentially passing the yield premium of Greece, Italy potentially down the pike as well. It's already performing worse than Spanish debt as well. Pierre-Yves, though, I'm curious if there is any sort of light at the end of the tunnel. If we get those spreads against German debt back down to levels we saw at the start of the year, what will it take for that gap to narrow?
Wow, it's a hard question to answer. I would think that the key point is really for the government to give a clear-cut decision on the one single financial item. It shows that it has a clear intention, and so far we haven't seen any such thing. So we were suggesting as a research firm that starting to sell some of the government holdings would be a very clear-cut statement about the willingness to start cutting the deficit, but this is mired as well in all sorts of political issues. So sadly, to your most important question, I don't have a clear answer. I'm very sorry for that.
No, it's okay. I think everyone's trying to figure it out. I certainly put you on the spot there. Pierre-Yves, I'll give you maybe an easier one, which is we've only been talking about kind of the inefficiencies of the French government, arguably the European one broadly as well. I'm specifically curious about what the effects of the Trump trade might be on France. We've talked about how Emmanuel Macron in previous programming has been very tough on the IRA, for example. The fact that the carrot and the stick method, either way, when it comes to the U.S.'s approach on Europe, has a negative effect. What more can France do to maybe cushion itself or combat some of the tariffs that may be coming down the pike from President-elect Donald Trump?
Well, if it is about more tariff on European goods, France is less exposed, and I would say sadly, than its other European countries, merely because France doesn't export that much manufactured goods. When it comes to IRA, which could be stopped, that is not a negative as well for French companies because they did not participate that much to the advantage that the IRA was providing. So I would say from a pure France to US sort of perspective, the outlook is not that negative. It's a concern, but it's not much worse than it could have been without Trump. The broader issue, obviously, is that the other countries in Europe, typically Germany, will not recover as much as they should have, and therefore France, as a partner to Germany, is going to suffer. So it's very much an indirect sort of cost that we see in terms of impacts of the Trumponomics on the European countries and, as a result, on France.
I mean, very quickly, I'm going to put you on the spot, Pierre-Yves. Talk to us about the currency impact here. What matters more for the euro, the French story or the German story?
Well, clearly it has to be the German story. The euro itself is just a definition of how strong the area is, which means how strong Germany is, how strong the ability of Germany to export is. So I guess it can be narrowed down to that sort of angle.
A very succinct and straightforward answer. Pierre-Yves Gauthier, we thank you so much, the founder of Alphavalue, joining us this morning, talking a little bit about the dynamics in the French government. Of course, we do await that vote on pension reform later today. Let's go to some of the other stories making news around the world. We'll start here in France, where France's richest man, Bernard Arnault, set to testify in a criminal courtroom today. The LVMH CEO saying he is completely unaware someone was trying to blackmail him. The case centering around one of the billionaire's former bodyguards and a paparazzo who allegedly demanded 300,000 euros in exchange for photos of him with a woman who was not his wife. Sticking to the M&A space, Direct Line Insurance has rejected Aviva's £3.3 billion takeover bid, saying it substantially undervalues the business. Under UK takeover rules, Aviva has until December 25th to announce a firm intention to make an offer or walk away. It's the second takeover bid rejected by Direct Line this year, following a proposal from Belgian rival Ageas in March. Inca Group, the largest IKEA franchise, saw a sharp decline in full-year profit after a round of price cuts and tough economic conditions weighed on the bottom line. Swedish furniture seller reported a 37.5% decline in operating profit to 1.3 billion euros for the financial year through August. Now, coming up on the program, we're going to talk about the defense space. Ukraine seeking more weapons and equipment to shore up its defenses against Russia ahead of any possible drop off in support during the Trump presidency. More on that conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. I'm Kriti Gupta in London. In today's Big Take, we take a look at Ukraine's attempts to fill the Trump-sized hole in its defenses against Russia. Should the country have to defend itself without the financial backing of its American ally? For more on this, we're joined now by Bloomberg's Andrea Palasciano, joining us out of Brussels. Andrea, a pleasure to have you on the program. Walk us through how much of a challenge it would be for Europe to step up its military support if we do indeed get that U.S. support out of the picture.
There is no understating how much of a challenge it would actually be for Europe to step up and pick up the part that the U.S. would leave behind. Since the beginning of the war, we can say that the U.S. and Europe have been roughly splitting the cake. They have been roughly splitting the burden of supporting Ukraine. But it's clear that while Europe has come up with most financial aid, it's the U.S. that has been delivering the actual weapons, the military equipment that Ukraine so urgently needs. And the U.S. has also been providing a lot of intelligence sharing. So it is a really big hole that the U.S. would leave behind if it were to step down.
To walk us through that ramp up, though, I mean, what does that even look like when it comes to actually acting on it? For example, and we heard about it in the Draghi report. We've heard about it from the EU Commission. We've certainly heard it from Ursula von der Leyen as well. How is it actually progressing? Are we seeing signs that there will be that kind of defense ramp up and it's going to bear fruit down the road?
So there is definitely an understanding in Europe that something needs to be done and that it's very urgent. How we actually get there is a different question. And when we look at the estimates of how much Europe would have to come up with in the next decade, it's like we're talking hundreds of billions of dollars. And there is no clear plan right now for how to come up with that kind of money, especially when we look at the state that a lot of European powers are in. They have very tight budgetary situations. They have domestic political turmoil. So there is no clear path forward right now, especially considering the fact that the European countries' defense industry is quite fragmented. It has been operating, at a low level for the past decades since the end of the Cold War. So it's definitely clear that there will be a huge effort ahead. It's not entirely clear how they will get there.
Bloomberg's Andrea Palasciano, we're going to leave the conversation there, but certainly fascinating reporting and certainly something that we're keeping a very, very close eye on. It's a similar story, by the way, and a similar conversation that's happening in the Nordic region, where countries have long been among the most vocal about the threat of war on their doorstep that Andrea was just talking about. Now, Finland has launched a website showing people how to prepare for any type of crisis, including how to last 72 hours in the event of a conflict or other crises. Neighboring Sweden has begun mailing updated leaflets to households, urging a, quote, greater emphasis on preparing for war. Let's get a little bit more insight here. Bloomberg's Nordic managing editor, Kati Pohjanpalo, I apologize if I mispronounced that. Walk us through this, Kati. Walk us through why European countries are stepping up that preparedness now when it's been a conversation for some time.
Good morning, Kriti. So it's not gone unnoticed that Russia's war in Ukraine really means war in Europe, is not just in the history books. And the primary job of a government is to keep its citizens safe. So this is really why governments are starting to prepare. But it's not just that. I mean, there's an awareness that climate change will bring on much more of these extreme weather events, like the recent floods we saw in Spain. And we've just come through a global pandemic a few years ago. So this is the backdrop to all of the preparedness work that is now starting to happen across Europe.
Walk us through the other kind of European stories here. I mean, how does this compete or how does this compare with the conversation that's happening in the EU Commission in Brussels?
The EU is really going back to its roots here. It was born to safeguard peace in Europe, to keep people safe, to ensure security. And that's really what they're doing now. There's talk of a preparedness union. Ursula von der Leyen, Commission President, this year commissioned a report from former Finnish President Sauli Niinistö on how Europe should be better prepared and what they could potentially learn from Finland. And so that discussion is really amping up. across Europe, countries are doing various things. You already mentioned Sweden starting to send these leaflets to households. Finland's put up the website on how to prepare for various crises. In Denmark, they're thinking about what to do for the banking system. In case power was out for a week, how would you pay for groceries? And the solution that they're coming up with is enabling all of the payment cards that people use to actually last for a week in that kind of a situation. Lithuania is doing a lot of work on stockpiling medicines, and that's part of a larger EU effort to put in 22 medical stockpiles in 16 EU nations. So there's a lot happening. Norway and Sweden are both thinking about stockpiling grain for the rainy day.
Can you just give us a little bit from a global kind of audience's perspective here? I mean, you talked a little bit about these different countries in the EU story, but Finland has largely been a yardstick for some of that. But I think just for a global audience that maybe isn't familiar with the history, can you walk us through why Finland is such a crucial piece of this equation?
Well, Finland has an extremely long border with Russia and has history of conflict with that. But it's also a very, very northern nation. A third of the country is within the Arctic Circle. And there is a history of famines. Just 100 years ago, there were still cases where people baked bread out of tree bark because that was the only thing left to eat. So there has been this long-standing effort to ensure there's enough food. A state granary was started 100 years ago. Organized preparedness work's been going on since the 1950s. And it's really, in a conflict that the country is surrounded by water from all of the key sides. So it can be very hard to bring in supplies. So you have to be prepared. And when people have been doing this for decades, it's built this mentality of preparedness. And it actually is not alarming, as many may see, when they see our story or read that story. It's more comforting for a lot of people to know that they're ready in case something happens and they know exactly what to do.
I mean, it's certainly a terrifying situation. We're going to keep a very close eye on that in terms of how this develops and what that kind of assisted preparedness and aid actually looks like. Bloomberg's Nordic managing editor, Kati Pohjanpalo, we thank you so much for joining us this morning. I want to go to some of the other stories making news around the world. We're going to stick with maybe the impact of the United States, but perhaps in a different angle. Donald Trump's picks for Commerce Secretary Howard Lutnick is among a number of the president-elect's political nominees who've been targeted with bomb threats and hoax phone calls. The president-elect's transition team said that several cabinet picks and appointees face, quote, violent, un-American threats to their lives and those who live with them. The FBI says it is investigating the incident. And sticking with the new administration, Donald Trump had dinner with Meta CEO Mark Zuckerberg at the president-elect's Mar-a-Lago estate in Florida last night. Zuckerberg and Trump have had a contentious relationship in the past, and Facebook has banned the then president in January 2021 in the wake of the attack on the U.S. Capitol. However, the two men have recently made amends, with the Meta CEO congratulating Trump on his recent election win. We should also make the key point that, of course, we know that Elon Musk has the ear of President-elect Donald Trump as well, and he and Mark Zuckerberg don't get along. A social media conversation there to be discussed. Plenty more coming up on the show. We're going to go back to the market. Stick with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. I'm Preeti Gupta in London. Look, we talk a lot about the tariff story. We talk a lot about this light volume, light liquidity and Thanksgiving. But I think the real highlight of today's conversation is what's going on in France, because that's what has the potential to move these markets. And I just want to kind of put into some perspective of the kind of risk we're talking about here. Stick with me. We're looking at the French kind of yield premium over Germany, that haute-bund spread, and we are all the way up at 86 basis points in terms of that spread. Compare that to what we've seen in previous iterations of crisis. It is higher than the pandemic of 2020. It is higher than Brexit which of course is a conversation about whether or not France should or should not be a part of the European Union. It actually goes all the way back to the European debt crisis. The themes are very similar. Does the budget imperil this idea of French borrowing, which has largely gone unchecked for the last couple of years? There are even potential fines on the table from the European Commission if they don't get their budget under control. And this is why the conversation with Prime Minister Michel Barnier matters so much. He has to get the budget across the finish line, and Marine Le Pen may not let him do it, or he might find that loophole, and Marine Le Pen may end up costing him his job. There's a lot going on there, but let me show you what's at stake. I want to compare this to the French 10-year yield relative to the Greece story, because we've already seen that the premium for French debt is higher than that of even Spanish credit. It was a big, big point of pride and point of victory over in Madrid, the idea that some of the peripheral credits are seen as safer debt to the French counterparts. And this is something that's crucial because now you are seeing this happen with Greece as well. This is Valerie Teitel's handiwork. She's really nerded out about this, but it proves a crucial point because Greek debt is now investment grade debt, and they are also investing. They're also growing in a way that maybe their French counterparts aren't. This is a bond story, but it's very much showing up in the equity story as well. And that's where I want to go next. This idea, the underperformance in the French benchmark is actually pretty brutal. We keep talking about it, whether it's a tariff hangover, whether it's a China consumption story and some of the drink makers, some of the luxury names as well. Maybe it's a little bit of a political overhang as well. And this is where this shows up. The CAC 40 performance relative to the stock 600, this giant red bar to the downside, you can see it goes all the way back to 2010. What happened in 2010? This idea of the recovery from the global financial crisis, that's where you're seeing most of the pain. That French had actually lagged relative to its peers. So this is crucial. That is actually coming in the bond market, in the stock market, maybe not in the currency market, though we had a guest earlier on the program saying that the euro was far, far more exposed to maybe the German debt break story. But in the meantime, while we're waiting for what happens with the United States, the Federal Reserve, and of course that German election, maybe, just maybe, some of this underwhelming that we're seeing in the equity story and the bond story could show up in the euro as well. 105 handle on euro dollar. A lot to digest, plenty coming on. Anna Edwards, Guy Johnson will be joining me in just a few moments. The opening trade is up next. This is Bloomberg.